The UK business investment fell by 2% in Q4 2025. I don't know if you were aware of that. That matters because when the investment backdrop softens, weak capital allocation gets punished earlier, not later. What I mean is what this example of this company. So when the back end of the organization is not hard enough as the front end, and when I say back end is your systems, capabilities, revenues, etc., are not hard enough as your products or services, then the capital start to be hesitant to become part of your organization, meaning you're not fundable, or you are fundable, by the way, but actually they are, as they call it, not investable, or actually we have concerns here. Probably we need to come back in 3 months' time to see how you're progressing. Have you heard that thing before? Problem number two, the British Business Bank says risk aversion at 77% and delivering at 75%, where the main motive behind is low investment, meaning that actually they are working at 75% capacity of the loan capacity. So why that is happening? That tells you the problem is not always a lack of ambition. Often is a lack of confidence in the quality of the return, right? So they say, back to this company, very, very skilled, very good, solid product line, but behind the products that they offer into the market, the organization itself, the bank is saying, we like it, but we don't know if you're going to be able to keep this commitment in the next 5 years, 3 years, or whatever is the term that you're negotiating, right? And problem number three is in January this year, there were 1,744 company insolvencies in England. And administrations were 14% higher than January 25, a year later. And we're not talking about, oh, this is historical statistic. This is happening like literally a month or 2 months ago. And this is another thing, 41% is higher than December 2025, this current month. So far, by the way, sorry, my apologies, in January. Well, what is going on? That is what happens when capital discipline arrives too late. So people are going into the last minute looking for rounds of funding. And companies become insolvent because they cannot raise as fast as they should. The companies are getting tighter, and the frustrations start to create more problems than actually solutions.